this subcommittee are authorized to participate in today's hearing. Before we begin, I'd like to announce that it is my intention to proceed with opening statements and testimony from our witnesses before recessing the subcommittee for the series of votes on the floor, after which we will reconvene and continue with the hearing. This hearing is entitled An Enduring Legacy: The Role of Financial Institutions in the Horrors of Slavery and the Need for Atonement. I now recognize myself for 3 minutes, possibly 4, to give an opening statement. The enslavement of African people. Hello, friends. As chair of the Financial Services Subcommittee on Oversight and Investigations, under the leadership of the Honorable Maxine Waters, it is my singular honor to convene this historic hearing to examine the role of financial institutions in the horrors of slavery. The enslavement of Africans was an epitome of evil, and its stain on human history cannot be sanitized with the passage of time. It was a horrific crime against humanity that demands redress, a crime which cannot be whitewashed with a solution of ignoble ignorance. This is in part why, large part I might add, I introduced H.J. Res. 64, calling for an annual day of slavery remembrance to prevent the sanitization and whitewashing of our seminal sin, slavery. We have a day, friends, to remember 9/11 and commemorate the thousands of lives lost to terrorism. We have a Pearl Harbor Remembrance Day to ensure that December 7, 1941 will forever be a day that lives in infamy. We have a Holocaust Remembrance Day to prevent the horrors of the Holocaust from ever being repeated. Dear friends, we need a Slavery Remembrance Day, not only to remind us of the horrors of slavery, but also the need for atonement. And although the practice of slavery may have been legal at one time, it was without question a profoundly immoral practice necessitating atonement. Consequently, it becomes important for banks, insurance companies, and other financial institutions with historic ties to slavery to atone. Recognizing that atonement is part and parcel to our need for reconciliation, and we have not reconciled in our country, I have introduced H.Res. 919, calling for a cabinet-level Department of Reconciliation with a budget indexed to the Department of Defense and a Secretary of Reconciliation who reports directly to the President, very similar to having the Department of Labor with a Labor Secretary and undersecretaries, I might add, the Department of Commerce, all of the various departments. We need a Department of Reconciliation such that we can reconcile. Reconciliation won't take place over a short period of time. This department would be as enduring as the Department of Labor is. And friends, although atonement for our seminal sin, the dehumanization and enslavement of human beings, has been too long delayed, I do not believe that the zeitgeist of our time will allow the suffering of atonement to be denied forever. I look forward to hearing from our witnesses on how contemporary financial institutions could address their history with slavery and provide measures of atonement in the present day. Thank you, and with this, I conclude my remarks, and I now recognize the acting ranking member, Mr. Timmons, for 5 minutes for an opening statement.
Mr. Chairman, I want to thank you for holding this hearing today, and to our witnesses, thank you all for taking the time to appear before the committee and share your research and experience. This afternoon, we are prepared to listen and learn, and I look forward to hearing everyone's perspective. Being from South Carolina, I'm keenly aware of my state's and our country's as a whole history with race. While slavery ended with the Civil War, there are still visual reminders in my state of this dark past. You can still see the scars on our state place. We're seeing the new South that we've built together in the years since these tragedies occur, and it is a much different place. Does work still remain to right wrongs? Absolutely. But there is no denying the monumental progress we have made. The legacy of slavery and the persistent racial economic disparities in the United States are linked, and we will discuss that history today. A number of the banks and insurance companies that we are going to discuss today have acknowledged their history and their connections to the practice of slavery. This is an important step, and I look forward to hearing from our witnesses about where those companies should go next. But we also need to be mindful of the fact that rising prices are making matters worse for households of color. The current inflation rate is 7.9%, the highest in my lifetime, which means that for working class families as well as seniors on fixed incomes in my district and across the country, it is getting harder and harder to make ends meet. This plainly shows that inflation is exacerbating racial disparities. Data from the Federal Reserve and the Bureau of Labor Statistics show that Black, Hispanic, and Latino households own their homes at a lower rate than white households. In an inflationary environment, rents tend to rise. Meanwhile, paying the mortgage becomes relatively cheaper, relatively easier. The net effect is an expansion of racial disparities. The same factors are at play when it comes to buying groceries and paying for gas in the last year or so. An analysis of CPI data by economists at Penn Wharton found higher income households had smaller percentage increases in their total expenditures because they spend more on services, which experienced the smallest price increases in 2021. On the other hand, lower income households spend relatively more on energy and groceries, whose prices had large increases. So again, inflation is causing racial economic disparities to expand. As we listen to the history of banks and insurance companies who financed slavery in the United States, I hope our witnesses will provide some important context and help us connect that history to contemporary disparities in home ownership and wealth. The data related to racial disparities make clear that households of color are at a huge disadvantage when it comes to navigating inflation. I think we have a responsibility to legislate with that in mind when we consider bills that may further affect the rate of inflation one way or the other. Again, Mr. Chair, I want to thank you for holding this hearing today, and I look forward to the testimony from our witnesses. I yield back.
The gentleman yields back. The chair now recognizes the chairwoman of the full committee, the gentlewoman from California, Ms. Waters, for 1 minute.
Thank you very much, Chair Green. Financial services institutions played a powerful role in financing chattel slavery. Insurance companies provided the financial protection necessary to transport stolen people from Africa to the United States and to protect slave owners from loss when a slave died. Banks provided loans to finance the purchase of slaves and accepted human beings as collateral. And some of these institutions are still in operation today, including J.P. Morgan Chase. Today, this committee continues its work to address systemic racism. So I do look forward to discussing the actions of our financial industry, what they can do to take remedy and deal with the lasting effects of their having profited from the enslavement of human beings. I yield back the balance of my time.
Thank you, Madam Chair. Friends, at this time, we'd like to welcome the witnesses. It's my preeminent privilege to welcome our witnesses and to indicate that we are looking forward to your testimony and greatly appreciate those of you who are here for traversing some distance to be here, and those of you who could not make it in, we look forward to hearing from you by way of technology, and we're grateful that you're there as well. Our witnesses are Dr. Dinah Ramey, Berry, and she is the Oliver H. Radke Regents Professor and Chair of the Department of History at the University of Texas at Austin. We have Dr. William A. Darity, Jr., and he is the Samuel DeBoer Cook Professor of Public Policy, African American Studies, Economics, and Business at Duke University. We have Professor Stephen Beckert, and he is the Laird Bell Professor of History at Harvard University. We have Ms. Nikitra Bailey. She is the Senior Vice President of Public Policy at the National Fair Housing Alliance. And we also have Dr. Sarah Fetterman. She is an assistant professor at the School of Public and International Affairs of the University of Baltimore. Witnesses are reminded that their oral testimony will be limited to 5 minutes. You should be able to see a timer that will indicate how much time you have left. Without objection, your written statements will be made part of the record. Dr. Berry, you are now recognized for 5 minutes to give an oral presentation of your testimony.
Good afternoon, Chairman Green, Chairwoman Waters, and members of the committee. It is an honor to come before this body and share my testimony on the legacies of slavery and connections to financial institutions. I have been studying this history for 30 years, and I appreciate the invitation. Enslaved people were valuable financial investments, so valuable that financial institutions, municipalities, universities, private citizens, and medical schools bought, sold, gifted, deeded, traded, mortgaged, leased, and transferred enslaved people as a form of legal tender. Human chattel were foundational to the Western economies from the 15th through the 19th centuries. They were one of the most unique forms of commodity and assets because they were human beings. Defined as chattel, a movable form of property, we have records confirming their value at every stage of their lives, from preconception to postmortem. We also have documents that clearly outline the connections between enslaved people and specific financial institutions, such as insurance companies and banks. Those records can be traced from slavery to the present. Such legacies reverberate throughout our society today and are reflected in all kinds of disparities. The wealth gap is so wide that most of us will not see it narrow in any appreciable way in our lifetimes. Turning to insurance companies, the Southern Mutual Life Insurance Company, founded in 1848 under the name of Georgia/Southern Mutual, shows evidence of profits generated from insuring the bodies and lives of the enslaved. During the second year of offering policies to enslavers, the company saw growth from 28 to 239 policies. It reported that most of those who purchased policies were modest enslavers who had, quote, a small number of slaves who they were dependent upon, unquote. Thus, they secured their income by taking policies on the lives of human property. Looking at policies from 1856 to 1863, we learn that the company insured enslaved people from age 1 to age 60. Some policies were for 1 month or 2, other policies were for as long as 5 years. Regardless of the length, each enslaved person underwent a medical examination to determine their value, and the company set premiums and rates based on their value. Although this company originated in Georgia, Southern Mutual Life Insurance Company had agents throughout the South and is still present today. In addition to individual policies, some states, including Maryland, passed legislation that encouraged people to purchase policies on the enslaved. Here, the state supported policies that helped enslavers search for self-liberated or runaway enslaved people in order to recover the cost of those who absconded and had been away for, quote, a reasonable period of time, unquote. The enslavers could make money off of those who escaped. The fact that enslavers could make money off of those who escaped is remarkable. They also made money off of what we call elderly at that time. 40-year-old Ehrlich was valued at $2,000 for 1 year with a premium of $80 and a percentage rate of 4% on his policy. What do these numbers reflect in terms of contemporary times? 51-year-old Charlotte was valued at $800 in 1860, which was equivalent to nearly $23,500 in 2014, and I would argue much higher today. Insurance policies alone help explain why some enslavers kept elderly enslaved people. Many would not command the insured value in the market. However, they could be replaced with someone younger at death. The banking industry literally facilitated transactions related to enslaved people by extending loans, securing debts, gifts, and deeds of trust, and banks including Citizens Bank and Union Bank kept track of collateral payments, issued notes, that involved the enslaved, whose names can be found throughout the records. I would like to close my remarks with the voices of the enslaved. After freedom, Henry Banner shared, quote, "I was sold for $2,300, more than I am worth now," unquote. Tempe Herndon and other enslaved women understood that their monetary value was linked to their fertility. "I was worth a heap because I had so many children," she explained. "The more children a slave had, the more they was worth." Hardy Miller remembered that enslavers paid $100 for every year you was old, claiming I was 10 years old, so they sold me for $1,000. While Martha King remembered her sale at 5 years old. She went on the auction block with her grandmother, mother, aunts, and uncles. "I can remember it well," she said. She told interviewers in the 1930s. "A white man cried me off just like I was an animal or a varmint or something." She also remembered her monetary value. "Old man Davis give him $300 for me." Today I share these testimonies as part of mine so that the enslaved voice is heard in the halls of Congress 150 years after the 13th Amendment, because the wealth generated from their labor still serves as the foundation of the American economy. Thank you very much.
The gentlelady's time has expired. Thank you very much, Dr. Berry. Dr. Darity, you are now recognized for 5 minutes to give an oral presentation of your testimony.
Thank you, Mr. Chair. In our book, From Here to Equality, Reparations for Black Americans in the 21st Century, Kirsten Mullen and I argue that the fundamental attribute of a reparations plan for Black American descendants of U.S. slavery must be elimination of the racial wealth gap. The Black-white wealth gap serves as the premier economic indicator of the cumulative intergenerational effects of American racism on the conditions confronting living Black Americans whose ancestors were enslaved in the United States. As economist William Spriggs puts it, the racial wealth gap is the central measure of opportunity stolen from Black Americans. The minimum sum needed to close the Black-white chasm in wealth is $14 trillion fund. It would take a millennium for the United States, or less than 3.5, to a reparations fund, thereby making direct payments to eligible recipients in an amount sufficient to build average Black assets to a level comparable with average white assets. However, this conclusion is not a recipe for paralysis on the part of private individuals and institutions, nor other levels of government for that matter. There are steps that can be taken to enhance racial equity by these institutions, even if they cannot execute a project for true reparations. For example, a central financial weakness of historically Black colleges and universities, HBCUs, is the underfunding of their endowments relative to predominantly white institutions, PWIs. Private institutions do have the resources to facilitate elimination of the HBCU endowment gap. I turn to Louisiana to illustrate the possibilities, a state where its 4 historically Black colleges and universities have significantly lower endowments per student than peer predominantly white institutions. I match comparable institutions. So the gap per student between the state's 2 Catholic institutions, Xavier and Loyola University, is $7,650 per student. The gap between Tulane University and Dillard University, 2 non-denominational schools, is $13,000 per student. The gap between 2 of the public universities in the state, Grambling State and University of Louisiana, is $12,230. and the gap between the two land-grant institutions, Southern University and Louisiana State University, is $14,575 per student. To close the endowment gap would require, at minimum, an additional contribution of $26 million to the endowment for Xavier University, an additional $28.75 million to Dillard University, $61.4 million to Grambling State, and $102 million to Southern University. The total would amount to approximately $218 million. There is compelling evidence that larger endowments per student are associated with higher graduation rates, but increased endowments are unlikely to be sufficient to bring about full improvement in graduation rates. The target for all the institutions should be at least to match Tulane's graduation rate of 85%. But closing the endowment gap holds tremendous promise for improving the quality and performance of the HBCUs. It will give them an opportunity to fully excel and to go beyond the accomplishments that they've achieved on the basis of meager resources. Who among potential private contributors could take on this task effectively? Certainly the banking sector has the wherewithal, since the top 10 banks in the United States have combined assets of approximately $13 trillion, albeit assets that are held with varying degrees of risk. The total needed in Louisiana amounts to a blip on the financial horizon. They could take these beneficial steps towards greater racial equity without doing major harm to their balance sheets. Thank you.
Thank you, Dr. Darity. Dr. Beckert, you are now recognized for 5 minutes to give an oral presentation of your testimony.
At Harvard University. I'm honored to have the opportunity to meet with this committee, and I have submitted written testimony summarizing my views. As a scholar of the 19th century United States who has worked extensively on the question of the role of slavery in US economic development, I want to give you some background on the issues in front of this committee, and I would be delighted to answer any questions that you might have. First and foremost, I want to emphasize that slavery was exceedingly important to US economic development. Initial findings of an ongoing research project have shown that during the 1840s and 1850s, between 10 and 14% of the US GNP derived directly from the labor of enslaved people. In large parts of the South, almost half of the regional GNP was produced by enslaved people. We also know that the capital stored in these enslaved people exceeded the combined value of all of the nation's railroads and factories at the time. The most important industry using enslaved workers in the 19th century, cotton production, produced about 5% of the nation's GNP in 1850. And cotton constituted more than half of the United States exports in most years from the 1820s to the 1850s. These numbers are significant. Even if we take the lowest estimate and assume that just 10% of the nation's GNP derived from the labor of enslaved people, that unpaid labor mattered greatly to the American economy. We can see this clearly if we compare it with contemporary industries. In 2021, all manufacturing activities in the United States combined contributed 11% to the nation's economic output, which is roughly the same share the labor of enslaved people contributed during the antebellum years. These numbers are also still incomplete. The economic impact of slavery went beyond the actual production in agriculture and industry. Many other industries directly served or benefited from slavery as well. They included northern manufacturers supplying the southern plantation economy, the slave trade itself, mercantile houses, industries dependent on slavery-produced inputs, as well as banks and insurance companies. Therefore, if we do not yet know the exact figures, we do know that the total importance of slavery and slavery-related industries in the United States in the 19th century was definitely greater than just the value produced by the labor of enslaved people alone. It is mistaken to think only about the southern states when thinking about slavery. Slavery's economic impact was national in scope. Also, northern states began abolishing slavery in the wake of the American Revolution. Northerners were deeply implicated in enslavement. Northerners shipped, insured, and financed plantation crops. They provided plantations with manufactured wares and they used plantation crops in industrial production. To comment on the subject at the core of your deliberations, financial institutions played a crucial role in enabling enslavement, making slave labor profitable, and facilitating slavery's territorial expansion. The United States was the world's most important supplier of the industrial world's most important commodity, cotton. As cotton fueled an industrial revolution, European and US financial institutions rushed into the cotton business. Slavery rested on the capital, institutional know-how, and varied services of the finance sector, and it was the finance sector that connected plantations to factories and London money markets to New Orleans credit markets. Advances on crops enabled planters to acquire land and enslaved workers. Planters offered the enslaved workers as collateral to access capital markets. While most credit relationships in the antebellum South were mediated by so-called factors, these factors in turn drew on banks and merchant bankers to finance the growing of the crop and the extension of agriculture into new areas. And this applies both to private banks as well as to public institutions such as the first and second banks of the United States. Insurance companies, as we have heard, were also involved in slavery. Since much of Atlantic trade consisted of the products of enslaved labor, marine insurance received a boost from an expanding slave economy. Life insurance also expanded under slavery, and scholars have estimated that beginning in the 1830s, several thousand life insurance policies were written on the lives of enslaved people. The historical evidence is therefore clear. Slavery was an exceedingly important part of the US economy before the American Civil War. It also had devastating effects on millions of enslaved women, men, and children, and it left a deep legacy of patterns of inequality in the United States. While millions of African Americans labored for generations without pay and under inhumane conditions, the wealth they produced accumulated elsewhere. In 1860, for example, white Southern men made up 59% of the wealthiest 1% of adult males in the United States. Many Northern merchants, manufacturers, banks, and nonprofit institutions gained from the uncompensated labor of African Americans. Meanwhile, African Americans received no compensation for their labor and could not secure family networks or accumulate property. They could not access educational resources and suffered from extreme forms of exploitation and maltreatment. After slavery, African Americans continued to suffer more than a century of further economic, social, political, and educational discriminations. The legacy of patterns of inequality and opportunity, or the lack thereof, that came from slavery is with us in the United States to this very day. Thank you.
Thank you, Dr. Beckert. Ms. Bailey, you are now recognized for 5 minutes to give an oral presentation of your testimony.
Member Emmers and other members of the committee. Thank you for the opportunity to testify at today's hearing. I am Nikitra Bailey, Senior Vice President of Public Policy at the National Fair Housing Alliance, the country's only national nonprofit civil rights organization dedicated to eliminating housing discrimination and creating equitable opportunities. As I represent and office more than 170 local fair housing enforcement agencies today, my testimony honors the sacrifices of my ancestors. Despite founding principles of justice and liberty for all, the atrocious institution of slavery helped to establish the United States as one of the world's largest and most competitive economies. The free labor of enslaved Blacks undergirded the financial health of America and its institutions. Every American institution stands on this foundation, including banks, where the institution of slavery revolutionized credit markets, creating complex new forms of financial instruments and trade networks through which slaves could be mortgaged, exchanged, and used as leverage to purchase more slaves, according to Professor Baradon. The legacy of slavery endures. It is woven into every aspect of our economy and continues to manifest. Let me name a few. The Freedmen's Bank, created to provide Black soldiers and their newly freed citizens a secure place for their savings, ended up being looted by its white trustees. Despite its promise of economic freedom and self-determination, in the end, more than 60,000 of its depositors lost $3 million, which was nearly half the wealth of Black citizens. I ask you to imagine for a moment the toil it took these Black Americans to amass $3 million, as most worked on the very same plantations and financial institutions established by new discrimination, as its policies both reflected and reinforced the practices of banks and insurance companies. FHA provided affordable housing for whites, leaving communities of color relegated to riskier, costlier, wealth-stripping financial services. Other examples, the $1 trillion for Black and Latinos lost during the subprime mortgage boom after being steered into risky products that led to foreclosure despite many qualifying for loans on safer and more affordable terms. The failure of lenders to maintain homes in communities of color that they took back through foreclosure or to market those homes in a manner that would maintain neighborhood stability. And during this current crisis, failing to provide lower interest rates and the cost savings to consumers of color, placing them at greater risk of foreclosure during this COVID-infused housing boom. White homeowners have been able to save $3.8 billion through refinancing annually in comparison to $198 million for Black homeowners. The Federal Reserve's ongoing monthly support of mortgage-backed securities is fueling these disparities, while simultaneously allowing investors to buy up all of the affordable housing stock. The stain of slavery spreads well beyond our banking system, but it is appropriate for this committee to focus on the role of banks because they are different from other kinds of businesses and they have a special relationship to the federal government. As the United States Supreme Court stated, national banks are instrumentalities of the federal government created for a public purpose. They are critical to the effective functioning of our economy, facilitating financial transactions, providing liquidity, and serving as a vehicle for monetary policy. Because of the public interest of the Federal Reserve's lender of last resort and a system of regulation that curbs risk and boosts public confidence. Now is the time to redress the legacy of their involvement in slavery and ongoing discrimination, not only to stop discriminating, but to take affirmative steps to heal the harms done over centuries. Following the people-led protests in the wake of the murders of Mr. George Floyd and Ms. Breonna Taylor, financial institutions made bold pledges to extend billions of dollars in the pursuit of racial equity. Fulfilling those pledges will not cure the stain of slavery from their foundations, but it will go a long way in advancing opportunity for the descendants of the enslaved. This committee has also taken action to address these issues, particularly the housing provisions in the Build Back Better Act, especially the first generation down payment assistance from Chairwoman Waters' bill that ended up in the bill for $10 billion. We need the Senate to act without delay to pass this legislation so that all of us as a nation can start to take actions for atonement. I look forward to discussing my other recommendations with the committee. Thank you again for the opportunity.
Thank you, Ms. Bailey. Dr. Fetterman, you are now recognized for 5 minutes to give an oral presentation of your testimony.
Thank you for inviting me today. My research considers how corporations can atone for participation in mass atrocity, such as genocide and slavery. My comments are based on 2 projects, one involving the French National Railways, known as the SNCF, for its efforts to atone for participation in the Holocaust. My second project came at the urging of my Baltimore students, who rightly encouraged me to study corporate atonement for slavery. Through this, I discovered Alexander Brown and Sons, founded in Baltimore, first in cotton, then shipping, and then fundamentally developing investment banking to fund plantation agriculture. Legacy companies exist today, as do those of Barings Bank. It's easy to look at a city like Baltimore and think that its golden days have passed. Those who followed the wealthy bankers and industrialists just didn't care for the city the way they did, one might think. But a deeper look suggests that the poverty, addiction, and violent crime we see today is not unrelated to how those industrialists acquired their wealth. Where to start? Well, for those seeking atonement, it is tempting to treat today's executives as the slaveholders themselves. Though their institutions benefited from slavery, today's individuals inherited these histories, they did not write them. So we want to separate the people from the problem. And there is a problem. That institutional wealth has compounded for over 200 years without addressing the souls that suffered for it or harm the inflicted upon descendants. I offer a corporate historical integrity model in my recent Harvard Business Review piece. In it, I advise corporations to commission an independent study of their history, to update their company's origin story based on these findings, make a public statement about the history, often an apology, and especially engage with affected communities to develop a meaningful response, commemoration, compensation, and other programs. Some examples of companies doing this work: JAG Holdings commissioned an independent study of its Holocaust connections and will make that public. They've also donated to Holocaust education. Georgetown University now works with the descendants of the slaves it sold back in the 1800s to determine the best use of the funds it will raise. The SNCF, the French National Railways, opened its archives, put up plaques, funds Holocaust commemorative activities, and engages in survivor communities. But perhaps most relevant today is Lloyd's of London, an insurance company. They've researched their historical ties to slavery. They've made those findings available. They've opened their archives. They've offered an unequivocal apology on the website. They also outlined their commitment to develop Black and minority talent, increase Black and minority hires, and prevent participation in slavery in their supply chain. Their statement on the website reflects the correct spirit, I believe. Quote, "We approach this work with profound humility, a spirit of openness, and real enthusiasm for change. We will continue to listen to and be guided by our Black and minority ethnic colleagues." But what about U.S. financial institutions? America's 50 biggest public companies and their foundations collectively committed roughly $50 billion since George Floyd's murder to address the issue of racial equity. That sounds great. However, the Washington Post found that more than 90% of that amount is allocated as loans or investments they could stand to profit from. Many people don't need more loans, they need help paying them. Brookings Institute studies show the Black-white disparity in student loan debt after graduation. Therefore, if we engage with communities, we'll see the need for student loan forgiveness, the need to offer free higher education to 3 generations of descendants. We'll also see the need for housing assistance grants, as we've heard, better public transit, grocery stores, healthcare access, childcare, elder care, after-school programs, and music and sport. Engaging with the communities also addresses the enormous dignity violation of slavery and segregation inflicted. To make any of these programs without people's input reinforces a paternalistic approach to their participation in society. Furthermore, corporate efforts towards racial equity will fall flat unless the companies take seriously their own institutional histories. I'm grateful for this collective opportunity to respond to a too long unatoned for aspect of our history. In addressing it together, we can help heal our country and be who we say we are. Thank you.
Thank you, Dr. Fetterman. Friends, votes are being called shortly, and we will have to move to the floor to cast our votes. The committee will stand in recess and reconvene immediately following the conclusion of this series of votes. I do want you to know that you have my apologies. I would not have this happen to you if I had my way, and I rarely get my way, but if I had, I assure you, you would not have to wait while we cast these votes. But do know that we will be back immediately after votes have been cast. And the committee will stand in recess. And witnesses, if you would, I'd just like to come down and thank each of you individually, if I may. The committee stands in recess. The committee will come to order, please. I'm grateful to everyone for being patient with us. We will now proceed with questions. And at this time, I now recognize the gentlewoman from California, the chair of the full committee, for 5 minutes of questions. Madam Chair, you are recognized.
Thank you very much for holding this hearing and affording the opportunity to start to get into some serious questions about slavery, the wealth gap, who's responsible, how it was created, and the role that insurance companies and banks have played, who absolutely, some have disclosed that they had policies, or in some cases I've heard that there were those with bank accounts that just got wiped out, et cetera, et cetera. I guess my question is, I know that there's a lot of discussion going on about reparations, and we have a study going on here, and in some states, they had created commissions, et cetera. But if they don't get around to getting reparations for, some long period of time, shouldn't those banks and insurance companies that have disclosed that, for example, New York Life Insurance Company reported under its previous name, Nautilus Mutual Life Insurance Company, that they wrote 508 insurance policies on enslaved persons. And so, knowing that, and they haven't admitted that, shouldn't we not wait for reparations? We should say that you owe the descendants of these policies that paid these premiums for maybe 20, 30, 40 years, some way by which to compensate the descendants of the people whose policies you had. Shouldn't there be a way that the banks and insurance companies should move forward now that have disclosed, and those that we're going to encourage to disclose, to do its own reparations? I'll start with you, Ms. Berry.
Thank you for the question. I agree, absolutely. We have records, we have the names of individuals. We can trace the descendants, not only of the enslaved, but also of the people who took out policies from the banks. We have these records that have been readily available. The policies that I quoted from Southern Mutual, I have 4,000 individual policies and a chart with all the names of when they were purchased, who they were purchased by, what the premiums were, the name of the enslavers, as well as those that were enslaved. So we absolutely can do this. It's a matter of those companies coming forward and being held accountable.
Thank you very much. Could I get each of you to weigh in on that? What do you think?
Absolutely.
Well,
I agree.
thank you. Again, as I complimented Mr. Green for holding this hearing should not be for naught. This hearing, given the information that you've shared with us, the disclosure that has been done, it seems to me that the federal government ought to move to do whatever it takes to encourage, to legislate, to get the compensation for the descendants based on the information being available. Do you think that's fair, Ms. Berry?
Yes, I do.
Do you think it's fair?
Yes, it is, and it is obviously a very large issue that affects many parts of American society and many businesses, not just insurance companies. And so I think this is fair, but I think it should be embedded within a broader conversation about the impact of slavery on American society and the institutions that have benefited from slavery in the past.
Well, you know, I appreciate that, but I think it's time to stop talking about it.
Representative,
We're way beyond the discussion point, and so I'm thinking that perhaps this is a time that we should move very aggressively if we can. Anybody else like to weigh in?
yes, I have a slightly different take on this. I certainly think that organizations that have been complicit with slavery, and not only just slavery, but there's a host of atrocities that took place after slavery ended. Certainly, they should take steps to improve conditions of racial equity in the United States. But I think we do have to be careful not to refer to whatever steps they take as being reparations.
Yeah.
Because they simply do not have the capacity to meet the bill that is appropriate for reparations. And the other point that I'd like to make is, while all the actions that they took are wholly immoral, they were actually legal under the conditions of law that existed in the United States of America. And so that the ultimate degree of culpability has to be assigned to the federal government. And it's the federal government that must ultimately pay the bill for reparations.
Well, thank you.
Of course, we don't have to wait for anything to happen with respect to federal action, but we do have to be very careful and circumspect about what we think are the magnitude of the actions that can be taken by private institutions and organizations.
Well, thank you so very much, and maybe we should take into consideration all of us who have policies that we hold now from AIG in New York. I yield back.
Gentlelady yields back. The chair recognizes the gentleman from California, Mr. Timmons, for 5 minutes.
Thank you, Mr. Chairman. Dr. Fetterman, I know you've done a lot of work with the French Rail Company, SNCF, in regards to their involvement with the Holocaust. What lessons from that work can we learn from to inform this discussion? Oh, I believe you're still on mute. Sorry. Thank you. Oh, you're still not coming through. You're not muted, though. I can come back to you in a second if that makes. Oh, it's okay. Dr. Darity, inflation is disproportionately more difficult to bear for lower income households. You don't necessarily have to be an economist to understand that rising prices at the pump and the grocery store hurt more when you have less money to spare. We also know, and we've had a number of hearings on this issue, that there's a persistent racial disparity in terms of household wealth. To offer a few examples, the food index has risen 7.9% over the last year, with dairy products rising 1.9% just in the month of February alone. The energy index has gone up 25.6% over the last 12 months, absolutely crushing everyday Americans' finances. And the index for used cars and trucks has risen by 41.2% over the last year. So, Dr. Darity, keeping all this in mind, can you share your perspective on how inflation exacerbates these racial disparities? Oh, you're on mute, sorry.
I think that inflation exacerbates these disparities in quite the ways in which you described. Because of the nature of the goods and services that are experiencing the most rapid price increases, these are items that hit families with the lowest incomes hardest in the present moment. But by the same token, I think that we always have to be cognizant of the potential inflationary effects of any new expenditure program. And there are ways in which new expenditures can be managed to mitigate the inflationary effects. So we should not view inflation as a barrier to new social initiatives. We just have to be very, very careful about the way in which we design them. And in our book, From Here to Equality, Reparations for Black Americans in the 21st Century, Kirsten Mullen and I talk about ways in which a reparations program could be structured and financed to minimize the inflation risk.
Are you able to hear me now?
Oh, yes, thank you, Dr. Darity. Dr. Fetterman,
Okay.
again, my question was in regards to SNCF, their involvement with the Holocaust, and what lessons from that work
Yes.
can we learn from to inform this discussion?
Yes, great. Well, one, it's very important to have the discussion before they're being sued by descendants, because that creates a very difficult dialogue once you're in the middle of a lawsuit. So I think it's great we're doing this ahead. The other is the SNCF did a lot of around transparency, public dialogue, engagement with survivor communities and descendants, and committed to changing their ethos. There are many Holocaust complicit companies that are still in trouble today for all kinds of different modern slavery and complicity and all kinds of other crimes. So you want to make sure the ethos of the organization has changed as well, so that slavery or genocide just doesn't become another bill for, or invoice for doing business, right? You're not just paying for that, for having done that. So I think having conversations with the executives is very important. I think also the employees of the company want to belong, and making it part of the diversity, equity, and inclusion efforts that they're already doing within these organizations. It's very difficult to do DEI work if you're not willing to look at your institutional history.
Sure, and along those same lines, you mentioned that leaders at modern financial institutions inherited the histories of their companies but didn't write that history themselves. Can you help us understand the significance of that distinction, and why is that distinction important in this discussion?
Thank you for asking about that, because during the French National Railways debates, there was so much anger being expressed when it was as if the individuals running the SNCF today were in fact living Nazis, and they weren't. They were, in many cases, they were Jewish themselves. So it's important to set a tone of we are working together on this problem, and there is a problem. There is a problem of that inherited compounded wealth. But just in the tone of these conversations, that it can be restorative. It's a larger restorative cultural conversation that we're having. And of course, it's very difficult because somebody's going to have to pay the bill and they will do part of it. But I think many of them, I mean, Lloyd's of London and some of the other ones are starting to step up. But I do find that when it's more of a retributive model, people close up, and we want to have a more restorative conversation.
Thank you. I'll close with this. we're seeing the Russian invasion of Ukraine, the atrocities, the genocide that's being committed there. The international community, the business community, is actually imposing sanctions. They're literally taking huge financial hits, whether it's McDonald's, Visa. There's just dozens and dozens of multinational corporations that are foregoing profits to try to hold the Russian war crimes accountable. So it's very promising, the direction that we're going right now, and I'm hopeful that we can hold the Russians accountable and address past wrongs in other areas too. Thank you, Mr. Chairman. I yield back.
The gentleman's time has expired. The chair now recognizes the gentlewoman from North Carolina, Ms. Adams, for 5 minutes and questions.
Thank you very much, Chairman Green, Ranking Members McHenry and Emmer, and to Chairwoman Waters. Thank you for hosting today's hearing, and to our witnesses, thank you for being here. As a college professor for over 40 years, it's always a pleasure to be surrounded by academicians. I was blessed to have been able to teach at Bennett College in Greensboro and HBCU for 4 decades, and it's because of another HBCU in North Carolina, in Greensboro, North Carolina A&T, which sits right across the street from Bennett, that this poor Black girl from the ghetto of Newark, New Jersey, is now able to walk the halls of Congress today. I remember Du Bois saying, of all of the civil rights for which the world has struggled and fought for 500 years, the right to learn is undoubtedly the most fundamental. So it's clear that education is part of the solution to helping Black America overcome the centuries of discrimination that we've discussed so far today. So Dr. Barrett, thank you for being here. And in your testimony, you discussed ways to enhance racial equity in our country. One of those ways was to invest in HBCU endowments. So can you tell us why HBCUs have endowments that are smaller than those of other comparable schools?
Yes, it is not because HBCU administrators are flawed at trying to manage their endowments. It is not because their alumni are not interested in making donations and contributions to their institutions. The central reason is, first, that there's a long discriminatory history of the provision of resources to these institutions, and second, their alumni, while being very willing to make contributions to their institutions, do not have the types of resources that the alums of predominantly white institutions have. And this is because of the magnitude of the racial wealth gap, which amounts to approximately $840,000 on average between a Black and a white household.
Wow. So can you speak about why the institutions that we discussed today should help close the endowment gap and how they could do so?
Well, I think the reason that they should be motivated to do this is linked to the importance of enhancing and strengthening historically Black colleges and universities. Historically Black colleges and universities are a disproportionate source of Black students who enter graduate and professional schools. Xavier University in New Orleans, for example, with only about 3,000 students, leads the nation in Black graduates who finish medical school. And so if these organizations are interested in making a true commitment to diversity and inclusion, they would want to have the most outstanding candidates possible coming out of these institutions. And the better these institutions can do in terms of supporting their students, the better we can all be in terms of how American society functions. I'd also like to add that historically Black colleges and universities seem to be a safer haven for students who are Black. They seem to be stereotype safe environments for those students. And also they provide insulation from predatory for-profit and for-profit colleges and universities. Students seeking higher education will not feel as much pressure to go to the for-profit sector if there are a wider range of opportunities to go to HBCUs.
Wow. Okay. So do you have any examples of what it would take to close this endowment gap at HBCUs in North Carolina, for example?
Yes, actually, I do. I did some back of the envelope calculations after doing the work on Louisiana. And North Carolina is going to be much more expensive than Louisiana. I compared North Carolina State University with North Carolina A&T, and the per student endowment gap, to eliminate the per student endowment gap would require $705 million. I compared Duke University and Shaw University, two of the older private institutions in the state, and to close the per student endowment gap between those schools would require $1.5 billion. And it would also require $1.5 billion to close the endowment gap between the University of North Carolina at Chapel Hill and North Carolina Central University.
Well, thank you, sir. Listen, you get an A in my class. Thank you so much, Mr. Chairman. I'm going to yield back.
Gentlelady yields. The gentlewoman from Georgia, Ms. Williams, who is also the Vice Chair of the Subcommittee on Oversight and Investigations, is now recognized for 5 minutes.
Thank you, Mr. Chairman. So y'all, I need you to hang with me through a little story here. I want you to think of the biggest, oldest tree. Its deep roots may be buried, but the state of those roots forever shapes what you see above ground. Today, we're going to take a shovel and explore the deep roots of our financial institutions. No big financial institution was built overnight. Many have grown over generations. Some absorb financial institutions of the past, and this includes institutions that profited off lending money that purchased enslaved people. People, y'all. This includes institutions that accepted enslaved people as collateral for loans. And this isn't what you see today, but this is part of the roots that grew that tree. Y'all, I've never seen any tree's roots dissolve with time, and time alone won't heal the sins of oppression. For any tree to bear the fruits of justice and equality for all, we must reckon with its roots. Achieving the promise of America means fully atoning for slavery, and this hearing is helping to do just that. Dr. Berry, enslaved individuals were denied the opportunity to build wealth for themselves and their families. Facing slavery, segregation, and invidious discrimination across generations, the average Black household today has only accumulated 1/8 of the wealth of the average white household. This is critically important to me as Atlanta, my home city, leads the nation in the racial wealth gap. What connections can we make between the wealth that was historically captured from the forced labor of enslaved individuals and the persistent racial wealth gap today?
Thank you for your question. One way we can look at this is to look at the ways in which families pass down funding from or wealth from their families to their relatives. And you see the families, white families, pass down enslaved bodies, enslaved people in wealth, and that wealth was listed and named. But the enslaved families and their communities they did not receive any funds. So that's one direct example in probate records that we can find. And those are registered in county records. But everywhere we turn, when we look at the records of banks, insurance companies, and not just public and private companies, but also the records of various policies, we find this data, and we can make that connection to today by bringing the genealogy forward.
Thank you. We must ensure that remedies for things like the persistent racial wealth gap, along with nearly 200 of my colleagues, I'm a co-sponsor of HR 40, the Commission to Study and Develop Reparation Proposals for African Americans Act. This bill has advanced through a committee markup, and I look forward to its passage. Dr. Berry, when the commission under this bill is established, what approaches or methods could it employ to review and quantify the historical involvement of the financial sector in the institution of slavery? How could the commission guide private sector actors like financial institutions to achieve appropriate atonement for slavery?
One is to open up the records, make the records available, and allow people to review them. If they need help from historians, I know there'll be plenty that will be available I'll volunteer myself. But I know also those records they have access to records that may not be available in public archives. And I think sharing those records is a starting place.
Thank you so much, Mr. Chairman, and thank you, Dr. Berry. I yield back the balance of my time.
The gentlelady yields. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you so much, Chairman Green. This is powerful. I think it's pretty historic to be able to have a hearing specifically about the role of slavery in our country and the financial institutions. And I just cannot thank you enough, Chairman Green, for your courage and taking this on. And of course, thank you to our witnesses for your expansive and exhaustive research. I am proud that I grew up in the most beautiful Blackest city in the country, but I have witnessed many of my Black neighbors, again, being impacted, the historical role of slavery and the impact it has on home ownership, on access to being able to have a good quality of life, economic wealth, and so much more. So I can't thank you all enough. We all know the role of slavery in the financial services industry is not abstract because of all of your research and work, that it's a legacy that is still being urgently felt in many of the communities across the country, including the one I represent. As you all know, several states, including Illinois, Iowa, Maryland, and North Carolina, and cities including Chicago, Los Angeles, Philadelphia, and San Francisco have enacted legislation requiring financial institutions to disclose their involvement in the institution of slavery. That is major. This should be something that is set across our nation. Dr. Beggart or Dr. Berry, as historians who have conducted this kind of research yourself, do you consider it feasible for companies to conduct such an audit to determine their past involvement in slavery? And have these local and state laws been effective at identifying past involvement in slavery?
Yes, that is a very good question, and the answer is yes. It's certainly feasible, and I think we can see that if we look at the one sector of American society that has, in the past 10 years, actively engaged its historical involvement with slavery, and that are American universities. And they have gone into their archives, they have consulted historical records, and in the past 10 years, they have written a pretty comprehensive history of how they have been historically involved with the institution of slavery, and they're grappling with the issue of how they should engage with this history in the present. So this would certainly be possible for businesses in the United States as well. And I think it would be a very good idea, because I think that would allow us to have these kinds of conversations that are both political, economic, but also enable us to have a conversation as a society about how we want to deal with this history of enslavement and what consequences we want to draw from that history.
I would just add that to the second part of the question about how effective has it been with the legislation that was passed in 2000, 2003, 2006, I think it was. Some of those records were put online, buried on websites. Some of those records that were supposedly made available are no longer available when you look for them. And I know this because I've taught classes and we had students doing projects, and they went to those very websites and couldn't find the insurance records. So if we're going to make stuff available, it needs to stay available. And I do think a commission that's going to generate the research to do this work is absolutely necessary, because you need to understand how to have the research skills in order to conduct the research that's involved in making this available to the public. I yield my time.
Oh, thank you so much. That was so insightful, Dr. Berry and Dr. Beggart. You know, Dr. Berry, in your opinion, is there enough connection from a 19th century, what I would call predecessor bank, to a 21st century successor bank to truly warrant the inquiry discussed here today? And if so, can you quantify in today's dollars the wealth that was generated from slavery?
I cannot quantify the wealth in today's dollars. Maybe my colleague, Dr. Darity, can, but I can trace, when we look at company records, we understand who their predecessors are. We know when there were name changes and when banks were taken over by other banks. The same way we trace genealogy or lineage, we can do the same thing with corporate companies and organizations. So that's the first start, is to see the connections and then look at the records.
Thank you. You know, Ms. Bailey, in your testimony, you drew historical connection between the legacy of slavery and racial inequality to the systematic barriers people of color face, particularly within obtaining financial services. I don't know if you know, but Michigan lost more Black homeownership than any other state in the country. And we used to be the envy of the nation at 70% homeownership in many communities. Ms. Bailey, can you briefly explain how the historical legacy of slavery and exclusionary policies like redlining still present obstacles for my Black neighbors today?
Absolutely. According to data from the Federal Reserve, we've actually seen the Black-white wealth gap grow by $20 trillion since the onset of COVID-19. The COVID policies to mitigate the impact of the pandemic has exacerbated wealth inequalities for those who have assets and those who don't. Since the start of the pandemic, the Federal Reserve has been purchasing $40 billion in monthly mortgage-backed securities, hoping to fuel the housing boom that we're experiencing. So because of those ongoing purchases, what we see are the very communities that are hardest hit by COVID-19 locked out. So communities like Detroit, they struggle not only with the historical legacy, but the current legacy of not being able to have access to small dollar mortgages because banks are not making loans in those communities. And just some specific data on what banks have done in terms of lending to African Americans based on 2020 data. Banks originated 3.9 billion home mortgage loans in 2020. Only 3.9% of those went to Black consumers.
The gentlelady's time has expired. The chair will now recognize himself for 5 minutes. And the chair, while I enjoy hearing you compliment me for who was more than ready to take on this challenge, I have to say a word about the chair of the full committee because she's known for what she's done for housing across the length and breadth of the country. She's known for what she's done to help persons who are homeless. But she doesn't limit her reach. She's not afraid to take on new challenges. And this is one of the great challenges of our time, to deal with our seminal sin, slavery, 1619, 20 slaves on August the 20th aboard the White House forward. We have not done the things that we should have done to deal with this issue of slavery. I'm honored to see that my colleague has arrived, Ms. Garcia, and I'm going to suspend my commentary because I'd like to recognize her. So Ms. Garcia, the chair is going to recognize you for 5 minutes. The gentlelady from Texas, Ms. Garcia.
Thank you, Mr. Chairman. I apologize, but we're having a markup in judiciary, so I'm a bouncing ball today. But I did not want to miss an opportunity to join you in this very important hearing. I'm simply devastated about the ways that the horrific legacy of slavery is built into the very structure of the U.S. banking system today. Racism is baked in. It's literally baked in, interwoven to the fabric of society and the laws that govern us all. It is our job as lawmakers to study the origins of these problems so that we can identify them and root them out. I am grateful to all of the witnesses for taking the time to speak with us today about how that can be done. So I wanted to discuss just this, actions that we can take. While we cannot undo centuries of oppression in one Congress, we certainly can do what we can and take some action. One major way to close the racial wealth gap is by ensuring that all people have access to credit for pursuing home ownership, entrepreneurship, and financial solvency. The Community Reinvestment Act was passed so that banks would have to reinvest the deposits received from minority communities back into these communities. But the CRA has not been updated in years, and we all know that the current financial services landscape is increasingly digital and not accessible. Measuring lending and investment into communities is a bit more complicated in a world where much of consumer banking is done online. Ms. Bailey, can you discuss some things that the regulators should take into account considering when they work on a modernized CRA?
Yes, thank you for the question. We actually need to have a more race-conscious CRA. When you look at the legislative history about the Community Reinvestment Act, it was clear that it was designed to focus on minority neighborhoods that were locked out of access to credit. We know that because of the legacy of slavery, that banks have over time disproportionately not located in communities of color, nor adequately applied and extended access to credit in communities of color in a fair manner. So we need a more race-conscious focus in CRA so that we can look beyond simple income solutions, because those income-based solutions are not solving the problems. Race-conscious policies created today's disparities, and only race-conscious policies can solve them.
Can you give us an example of some of the policies you think we should implement?
Absolutely. So again, thank you for the question. The Equal Credit Opportunity Act already allows banks to use special purpose credit programs. So banks can look at the lending that they're doing today and figure out the communities of people that they're underserving, and they can design targeted programs like First Generation Down Payment Assistance, which this committee passed, and the Build Back Better Act to really help extend credit for first generation home buyers who are underserved. And when we say first generation, we mean people whose families were excluded by federal housing policies because those redlining practices extend directly from the legacy of slavery. So targeting down payment assistance by first generation actually is a way for us to ignite economic growth and to close the existing disparities. If we invested $100 billion, we would see 5 million new homeowners. 1.7 million of them would be Black, 1.32 million would be Latino, and 1.4 million would be white. So these policies of race consciousness, while they help solve racial disparities, they also provide overall economic growth.
So you believe that redlining still exists
Absolutely.
every day in America?
Absolutely. Just based on the data that I just shared with you about banks and their originations, when you look at the more than 1,500 banks originating more than 1.1 trillion in home mortgages in 2000, based on the HMDA data, only 35 billion or 3.6% were to Black consumers.
Can you tell us, because I'm curious more than anything, geographically, would you say it's more in the south and the north, the east, the west, or all of the above, everywhere?
I think because of the COVID boom housing challenges that we're experiencing, what we actually see is that investors are being able to purchase homes in the communities that were hardest hit by the subprime mortgage crisis. 1 out of 7 homes today are actually being purchased by investors, and most of those are happening in Black communities and also in Midwest communities all over the country. So we see this exclusion on a national basis.
Well, one quick one. Do you think that's what's raising the cost of homes, even in minority communities, that it's investors and not individuals?
I think the investors are purchasing all the affordable housing stock, causing a rise in rental homes, but also locking out home buyers who would perform well if they had access to home ownership with things like first generation down payment assistance, which this committee passed in the Build Back Better Act, and it's especially why the Senate should pass the housing provisions. There is $150 billion in the Build Back Better Act that will help alleviate some of the challenges that we've seen for homelessness and the lack of access to home ownership.
Thank you, and I yield back. Thank you, Mr. Chair.
The gentlelady's time has expired. Reclaiming my time, let me move expeditiously. This will be what we will call a voir dire or voir dire portion of the hearing, depending on where you're from. It's a French term and it means to speak the truth. So let me ask you candidly, do you believe that it would be of great benefit to have a Department of Reconciliation? I support reparations. I support H.R. 40 that Jackson Lee has, Congresswoman. I support Congresswoman Barbara Lee's Truth and Reconciliation Commission. Has nothing to do with those, would in no way prevent those things from coming to fruition, but it would give us a person who would be called a Secretary of Reconciliation, who would be there to every day find ways to deal with the invidious discrimination across all of the lines in the country. It's not just about one group of folk. It really is about our failure to reconcile when we had the opportunity to do so in 1868. So I'd like for you now to give me one quick answer, each of you, and I'll start with Dr. Ramey. Would you believe that a Department of Reconciliation would be appropriate?
Yes, I do think it would be appropriate, partly because we have not healed or had the kind of conversations we're having today. Our textbooks don't contain all of this material, and a lot of people will say that they didn't learn some of what we've talked about today. We can have this reconciliation through education, and having that commission and having a commissioner in charge of that would be the first step in helping educate our nation.
Thank you. Now, just to give clarity, make it perspicuously clear, it wouldn't be a commission. This is a department with a secretary that reports directly to the president. There's a little bit of a difference. There could be a commission associated with the work that's done in the Department of Reconciliation. This would give us one agency within the government that oversees all of the various subsets and can bring all of this together for us. So let's move next to Dr. Darity. Dr. Darity, a Department of Reconciliation, yea or nay?
Yay. Certainly. I think that we would need a cabinet level position for a secretary who would have the responsibility for monitoring the conditions of racial equity in the United States.
And I would contend that if what you say is correct, and I have great respect for you about the federal government being the only entity capable of satisfying the necessary redress, a department of this magnitude would be of great benefit if we had that type of redress available to us. Moving quickly now to Professor Beckert. Professor, your thoughts on a Department of Reconciliation?
Look, as a scholar, I can tell you that slavery, in some ways, the effects of slavery are still with us today. So we live still in a world that is partly structured by the effects of slavery. I can also tell you as a scholar that this nation has tried to engage with slavery for 150 years and has not done so very successfully. As a citizen, I think we must, as a society, confront this history, and we must confront it in new ways, and we must draw lessons from this history for the present. When we do so, I think we should look at other countries in our own history, how this has been done in the past, and the way that you suggest would be one way forward sounds to me is a plausible way forward, because I think as a country, our future depends on being able to engage with this history and to learn from this history.
Thank you much. Thank you so very kindly. Ms. Bailey, your thoughts on a Department of Reconciliation?
I think it would be morally appropriate, sir, but even beyond just the moralness, I think solving for racial inequity in our country provides an opportunity for economic growth. Research over the past 20 years shows us that discrimination is a drag on our economy and that we've lost $16 trillion. And if we actually address discrimination, we have a chance to grow our economy by $1 trillion every year over the next 5 years.
Thank you. I'm going to have to go quickly to Ms. Fetterman. I thank you for your testimony today. A Department of Reconciliation reporting directly to the President.
My experience as a conflict professor and studying reconciliation around the world, yes, I'm in support, and it might be worth considering adding the word truth, because there are times in which reconciliation efforts push people towards reconciliation before they've been able to expose and say what needs to be said. So that's one way to kind of deter some of that, sometimes some of the negative consequences of pushing for reconciliation before that work has been done.
Thank you very much. Two very quick points. Dr. Darity made the point of the moral imperative associated with atonement juxtaposed to reparations, and has made it clear that we can have atonement, but let's not assume that that would be a substitution for reparations. I appreciate you making that comment, Dr. Darity. Did I sum that up appropriately?
Yes, you did. Thank you.
All right, thank you. And finally, this Slavery Remembrance Day. We do have a 9/11 Remembrance Day. We have a Pearl Harbor Remembrance Day. But we don't have a Slavery Remembrance Day. We have a Holocaust Remembrance Day. These days are important because they help us to assure ourselves that we won't forget the transgressions of the past and allow them to creep into the future. But there's something even more important. They remind us that we have not atoned, I have resolution to calling for a Slavery Remembrance Day. It's not a paid holiday. It's a day that we remember the horrors of slavery, and we remember that there's still this need for redress. Is there anyone who would oppose a Slavery Remembrance Day similar to the Holocaust Remembrance Day, 9/11 Remembrance Day, Pearl Harbor Remembrance Day? By the way, we also have a ice cream remembrance month. But be that as it may, is there anyone who would oppose? If so, kindly extend a hand into the air or raise your voice. Anyone? Let the record reflect that all of the witnesses are in concurrence that we should have a Slavery Remembrance Day. Friends, regrettably, this will have to bring our hearing to closure. I am greatly appreciative for all of the persons who've given their testimony. This has been a most informative hearing for me, and I'm sure it has been equally as informative for all of my colleagues. As you can see, the attendance was very good, and with the kind of attendance we had, it begs the question of, should we stop now? As you know, the chairwoman made a very salient point when she said, we need to make sure that we do something, not just have a hearing and move on. So with that said, I'd like to thank our witnesses for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you're able to do so. And without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I remind members that written questions and materials for the record should be submitted to email address provided to your offices. And at this time,